for the fourth week in a row. So we've seen pressure on the metals. I see gold is higher today, but down for the week. Bitcoin up 285, 47,960. Just can't get back up there. U.S. dollar down 0.1%. Crude oil is up 0.75%, 71.47 the barrel. The VIX is at 20.48, down about 5%. Let's get some insights on the news that's shaping the markets, and for that, we welcome in Calvin Schnorr, senior economist at Nareit. Calvin, thanks for being with us. I was looking at all your notes pertaining to REITs and inflation, and how did you take into stride this morning's CPI data?
Numbers show that inflation is still an issue. We're seeing inflation still running above the Fed's preferred trend, and it's above what anyone would be comfortable with. But you have to keep in mind what's causing this is the congestion at the ports, the supply chain bottlenecks, the shortages of some key components, and that hasn't gone away. Yesterday, the chief of the Long Beach Port Authority was speaking, saying that he expects it to ease, but it may take 6 months. You're going to see inflation continuing to run above trend for most of the next year. Now, the Fed understands that. This is not necessarily going to lead to longer-term inflation, and it's not necessarily going to cause sharp interest rate increases. This is neutral for the U.S. economy right now.
Okay, and so future going forward, what does the Fed do here as they continue to see these numbers, right? This is the highest level that we've seen since 1982. What do you think the Fed does? There's talk about, May hike I saw had a 59% probability. Faster taper and hikes? Tell me more.
Well, the Fed does have a challenge here because for the first time in quite a while, their policy objectives are in a bit of conflict. Their two goals are maximum employment, getting the economy as strong as it can, but price stability. You don't want inflation to go along with that. Normally, those two are well aligned, and they want to give some stimulus to get the economy going and inflation is weak, or alternatively to slow the economy. But now there's obviously a contrast. They can take away the taper. They can begin raising interest rates, putting them back towards a neutral. Right now, they're still quite stimulative. They can take away the juice that they're giving the economy without causing us to slow a whole lot. I expect that's what they're going to do. You're going to see more announcements that they're going to proceed with the taper, maybe even speed up the taper. That will not disrupt financial markets. And they can begin raising interest rates next year. Probably middle of the year, second half of the year, I expect to see the Fed funds rate going back towards neutral. Again, that's taking the foot off the accelerator. It's not putting the foot on the brake.
I wanted to turn your attention to your specialty, and that is REITs. When you look at commercial real estate, I was going through the notes that you sent, and I saw within real estate REITs, there were different sectors that seemed to perform better than others. Self-storage, industrial, you talked about data centers, infrastructure. How do you see it all playing out? If someone wants to invest in REITs, what do you tell them?
Well, first of all, the overall listed real estate sector, overall REITs have had a very strong year in 2021, a very strong year with stock returns of 33% or more. So this is a very strong year coming back. It's showing that they have very solid fundamentals. And then some of the sectors have just been exceptional. Self-storage is benefiting from a strong housing market, housing and apartment, people moving, people buying homes, they need place to store, up 63% for the year. Industrial, this is logistics facilities. They're delivering all those packages you're buying on eBay. They're on Amazon or eBay. They're up more than 50%. You're also seeing retail having a very good recovery because over the past year, people have seen that brick and mortar retail still is a favorite for a lot of people. You're seeing a lot of strength in the brick and mortar retail sector. I could go through the list, but overall, most of the real estate sectors are doing quite well. And in 2022, I expect to see continued firming of their underlying fundamentals, their occupancy rates, their rents, their earnings. You're going to see a good year for REITs in 2022.
So a good year for REITs in 2022. What about everything else? As people are still trying to digest that 2019 is gone and it just feels like a whirlwind few years, doesn't it? How do you feel about the overall market in 2022?
The overall market is pricing in a strong economy. And the good news is we've got a strong economy. You can look at a lot of the monthly spending numbers, the quarterly spending numbers, but one of the other things that's been very important over the past 18 months is the sound financial fundamentals of all the sectors of the economy. You think back in 2008, 2009, the banking system was on the ropes. Well, right now, banks are well capitalized. They're able to provide financing for businesses, for households. That's been critical in helping the economy through this rough patch. Similarly, corporations. A lot of corporations were pretty weak in 2008, 2009, and 2010. They couldn't expand very rapidly. Right now, corporations are strong. They have good balance sheets. They have strong earnings. Not only does that support the overall market, it also gives them money to invest, particularly invest in infrastructure, transportation, production. That's one of the things that's going to help bring inflation back down in the future. Third thing I'd like to mention is households have a very strong position. Household net worth, financial position, you're not seeing the wave of foreclosures and bankruptcies that we did 13 years ago. You're seeing very strong households. They have the wherewithal to continue fueling this economy.
Do you have a warning for anybody either pulling some money out of a certain area or don't make this mistake of going all in at the same time? Do you ever give some sort of tip of your own?
Yeah, don't be too smart and try to beat the market. The things that you want to do is you want to be a long-term investor, which means don't try to time it. Don't get in and out. And another, having a diversified portfolio. And that's important to remember. That includes real estate and REITs. A lot of people don't realize that that income-producing real estate is the third largest asset class in the U.S. after bonds and equities. You've got about a $20 trillion commercial real estate market, and many people don't have a lot of direct exposure in their portfolios. You've got some through your 401k, you've got some through other investments, but you should have a direct allocation to REITs in your portfolio if you want to gain the benefits of their income, their total return, and also the diversification that reduces risks in a diversified portfolio.
Calvin Schnurr, thank you so much. Of Nareit, thank you for being here with us and your tips and advice. We appreciate it very much.
Thank you. Thanks for having me.